Another scalping video for you guys. In this video, I am going to be breaking down two trades that I took on NQ, basically back to back within, 30 seconds or less of closing this initial short trade. I hopped into a long. So I'll break down my thought process on both. And I want to show you guys really the lesson from this video is going to be being flexible in your edge. It is extremely important to be flexible in your edge, to understand that the market gives you clear signals when your trade is coming to an end or when the probability of your trade is no longer there. And in this case, I was able to take a quick short scalp and then flip long and lock in some good profit on the long scalp as well. So let's go ahead and break things down. This is a trade that I took this past Tuesday, November 8th. Once again on NQ. You can see here, first and foremost, that we had a bit of a pro break. Now, again, I think this is a good example of how my entries aren't always perfect, right? And I had the probe drawn here like this initially, and then once we made this next low, I did not draw it, but this was the pro break that I saw and took. So essentially what we have here is an upwards trend line being formed by consecutive higher lows and higher highs in this case as well. And a lot of times when these break, they offer up high probability trade opportunity, especially with Confluence with our other tools. So you can see here at the same time, or right around the same time that this probe broke to the downside, we had the oscillators curling and crossing to the downside. We had the Z cubed curling and crossing down. We actually also had the BBWP, our volatility oscillator, as well as the PMARP. And you can see that we also had a little shift in delta there as well. So a lot of things lining up. Good checkboxes, if you will. And of course, we had solid candlestick structure starting right here, actually, where this candle closed below the low of the prior. And then we had continued good candlestick structure for further downside pressure. So you can see that I actually did not enter because I missed the initial break of this probe right here and entered about 2 or 3 bars after that. So my thought was, if I could get in after the probe break, I could put a stop loss above the probe, and if we were to break back above that probe, then my trade idea was likely invalid. So I had very good risk to reward there. I also had a very, very good target area, and you'll see that I was essentially targeting, front-running the value area high from November 8th, and was waiting for something like a local low to show me as my contingency plan where to exit if that happened before we got to my initial target. So I'll go ahead and click play here. You guys can see how this continues to play out. So price moves down pretty nicely here to test this prior low. You can see right here, we had a little bit of bullish divergence here, and price moved down to test that liquidity there. And you guys will relatively quickly see, you can see that I redraw that probe, and that is exactly the probe that I entered on. And again, my trade was a little bit late, so it wasn't perfect, but it was still high probability, which is why I jumped in. So you can see that I'm flipping back and forth here between ES and NQ, still in this trade on NQ, and we start to get some buying pressure around that prior low. You can also see, if I pause it just briefly here, you can also see that the oscillators are getting a bit extended to the downside. Now, they haven't curled or crossed up yet, but my contingency plan, or what I look for to exit if price starts to reverse on me, what I look for as a signal is first and foremost a local low, right? So in order to have a local low, all we need in this case is this current bar to close above the top of the prior bar. So I essentially have my finger on the trigger ready to close because I know that the momentum oscillators are getting extended to the downside, and I know that purely based on candlestick structure at this point, there are some buyers stepping in right here. As you can see, 0 bullish candles this entire move down. Very, very strong move. We technically did not get the local low there, so I did not close yet. I waited. And one thing that helps me is, even if I'm giving back some profits on a trade, I always want to manage my trade in a similar fashion. And this way, I can have clear rules and a clear plan in place. And in this case, my plan is, if we put in a local low before we get to my target, I'm going to close the trade and perhaps even take a trade on the other side if things set up. So down here, oscillators are getting even more extended to the downside, which tells us that the momentum is likely to shift, right? So at this point, all I am waiting for is a local low to close my trade. I don't care that it's not at my target. I don't care that I was once up 750 on this trade and now I'm only up, 600 or 650 or whatever. It doesn't matter to me. What matters to me is that I am treating this trade the same way that I treat all of my trades. I have a contingency plan. I have a plan in place to close my trade even if price does not go to my target and lock in profit. That's one thing that I really see a lot of traders do incorrectly, in my opinion, is they will hold their trade, do or die, back to their stop loss, and not have a contingency plan. Even if their target's 20 points, they will hold it all the way down to, 10, 15 points in profit, and then watch price come all the way back and stop them out. Me, I'd much rather take 10 points, even if my target is 20 every single time, based on the same type of contingency plan or a risk management plan to make sure that I'm securing profit, regardless of the point amount. So you can see here that I very quickly exited the short as soon as this local low printed, right? So we're watching this candle structure. I'm watching the tick counter. Boom, it closes above the top of the prior one. And not only do I close my short, but I enter a long. I enter along because of these factors, because we now have a local low around a prior low, which is not necessarily as major of a level as it would be to enter around a market profile level, for instance, but this is a clear area. And if it is bounced before, then we are putting all of these factors together, like the momentum oscillators curling and crossing to the upside. We have a prior low here. We have a local low with good candlestick structure. This bar, strong bullish bar, closing above the top of the prior bar. That is my signal bar or my trigger, if you will. And that's what got me to hop in. You can also see that we have the BBWP curling and crossing to the downside, which shows a cool off in volatility, right? Now, that might seem confusing to some of you guys, but think about this. If volatility expands, you can see right here, volatility expands here as price makes this downward move. I entered halfway into the move, so I only caught a small piece of it, right? But if the last expansion was a move to the downside and volatility is to cool off, then we are much more likely to get a bounce to the upside, especially with all of these other factors, right? So we have the oscillators curling and crossing. We have the BBWP moving down for a volatility cool off. We have a prior low here. We have a new local low here with good, strong, bullish candlestick structure, and I'm in, right? That's 3, 4, maybe even 5 boxes checked if you're considering that we also had a probe right here, right? So I would consider it at least 4 or 5 boxes checked, which means that this is a high probability setup in my favor. Is it an A+? No, by no means. But is it something that I'm willing to put risk on? A, because my risk is so tight, because I can really have my stop loss below this prior low right here, and that's where I am looking to close the trade if things don't work out. So you can see here that we never violate this prior low. I eventually pop my stop loss right there at 1176. So I'm risking 12 points, right? I'm risking 12 points, which is pretty tight risk on NQ. If I can risk under 15 points and I have multiple technical checkboxes in my favor, I am going to take that trade basically every time I see it if I'm trading in the zone. So you can see here, I do not have a target set. I am looking, around this prior area. This prior low could be a resistance, or support turned to resistance. So I'm considering that. I then put my target a little bit above that at the prior high to give price a little bit of cushion. If it does run above these prior lows, it is likely to get, a little bit of a further push due to running some stop losses. So that's why I have my order where you see it there. And I am simply just allowing price to play out, keeping an eye on the oscillators. The trade idea is not invalid unless this prior low breaks. So a situation like this, where we put in a local top or very close to it, and then continue to move down very, very close to my stop loss, it's not comfortable, but it's something that I have gotten so used to that this does not affect me mentally at all. I understand my risk. I understand where my technical level of invalidation is. And just for a little bit of follow-up on that, if we break where my stop loss is, this prior low, then we're very likely going down to this area right here, the value area high from the 8th of November, that same day. So I am saving myself an extra, 6+ points of risk by having my stop below that prior low. And I know that if that gets invalidated, then we're very likely going to 11,171, which is that value area high level. So I'm going to click play again. We'll get back into the trade. You guys can see that price messes around here for a little bit, never invalidates the prior low. It actually technically prints another higher low based on the candle closure. And as you can see, price moves right in the direction after a little bit more pushback of my trade. So I am continuing to fast forward this. You can see not comfortable, right? Price looks like it's rejecting from the opportunity zone. The oscillators are getting pretty extended to the upside, but they have not even met the bullish control zone yet, which is this zone up here, which is a little bit of nuance that I take and use to my advantage when trying to be, solid with my risk management. I know that in this case, my trade idea is not invalidated unless we break the prior lows. So I'm doing my very best to hold on and allow price to work itself out. So you can see as price comes up and starts to test this prior area, I will peel one off. And that's basically just me cutting one contract, taking profit on a third of the position. And I will fast forward just a bit so you guys can see that. Boom. So you can see I sell right there. As soon as the candlestick structure goes from basically entirely bullish, right? All these are very strong bullish candles. And then we print a doji, right? A doji very often is a signature of a reversal. So that is how I mitigate my risk. That is how I make sure that I'm at least locking some profit in, right? I'm taking 30% there. And that is a way that I make myself comfortable and make sure that I'm paying myself for a good entry, right? First and foremost, one thing that I notice is so many people will do exactly what I mentioned a few minutes ago, where they'll get into a good setup. They've got a lot in their favor. They see this happen, and then they hold all the way back down to their stop. I am not interested in doing that. I have done that way too many times in my career. So I am at least pulling off partial profit. And a lot of times I'll pull off the whole trade. It really does not faze me. Even if my target's, somewhere up here or something like that, it doesn't matter. I'd much rather pay myself for taking a good entry than experience the pain, so to speak, of having a good trade come back to me or come back to my entry and stop me out. So that is exactly what I did here. And you can think about the instances or how many times you guys have got into good setups and it's gotten 10, 15 plus points in your favor and you've held it back to the stop purely because your target was a little bit higher. Me, I have learned my lesson, and I, most importantly, I think, have understood what is comfortable for me on a day-to-day basis. Now, for example, if you read Best Loser Wins or listen to that book, Tom Hugard, his opinion is different than mine. He experiences more pain by letting a trade, by closing a trade too early, essentially, and then watching it go further in his favor. Me, I really don't care about that. I know that my opportunity presents itself so many times a day, and he might be trading on higher time frames, so he might have less opportunity, for example. But this is an important thing to understand at an individual trader level. What causes us more pain is going to be different from person to person. Me personally, I cannot stand it to get into a good trade, watch it go significantly in my favor, and then reverse. So does not matter to me whether it's, 10 points or I took 11 points on one contract and then I took, 5 or 6 points on the other one. It's okay with me. I am locking in money, and most importantly, I am trading according to my edge. I am trading according to what works best for my trading psychology. And it's really important to understand that we are all different. What works for somebody might not work for somebody else. What causes one person pain might not cause pain to another trader. So it's very important to journal these things and record these things and have hard data. And for me in my journey, I noticed that I would get into good setups and I would, let them come back and stop me out way too often. So now I always have a contingency plan to make sure that I am realizing profit and also keeping context in mind, right? I am not trying to hold for a home run on this trade, just going for quick scalps. You can see, like 6, 7-ish points on this trade, flipped, and then 10 on one contract or 11 on one contract, and then 5 or 6 on the next, right? Base hits pay the bills, and that is what it's all about. You know, there's certain market context that I will hold for a longer trade, but this isn't it. You know, I'm just scalping around trying to secure the bag. So that is really the goal here, and that's what I wanted to talk to you guys and show you guys in this video. And it wasn't anything crazy, right? It was $845 over 2 trades in a matter of, you know, maybe 10 minutes or so. So you can see that this is also a good example of where not every trade is going to be a home run. I had 2 shorter, smaller scalps in this video, and I want to, you know, kind of have a comparison between a lot of my other videos, which are, you know, a lot more money in even a shorter period of time. You know, I have videos that I make $4 grand in 2 minutes or 30 seconds or something like that. But it really doesn't matter. You know, the market gives us the opportunity, and we have to seize it, and we have to understand when these individual trade opportunities are coming to an end. And you can see here, I entered late, so I capitalized on what I could. And here, I think I entered pretty darn solid, had a good risk management area or a level of technical invalidation, and then exited at my contingency plan, right? So that is an important piece to focus on. What is your contingency plan? What is causing you to take profit or close your trade before you hit your target? And you guys might be more inclined to, you know, hold all the way back to your entry. But again, for me, I am not interested in getting into a high probability setup and not getting paid for it. That is kind of my thesis behind this. So I hope this is a valuable video for you guys. I know it's a bit different. I hope that it is not a letdown because I only made $845 in 10 minutes instead of, you know, a larger amount of P&L, but that's not the point of this video. You know, when I'm making these videos, I am making them to show you my thought process and my mindset when I'm managing trades, when I'm entering, what I'm looking at for these triggers. And the P&L is really just a side effect of us continuing to execute our edge on a daily basis and not deviating from that plan. So again, I hope this is a valuable video for you guys. If you do find value in this content, please feel free to like, subscribe, and click that bell notification to get notified when we post videos. If you want to learn more about what we do here at the Trading Network, please check out thetradingnetwork.io, where you can purchase access to the TTN Pro Trader Bundle, which includes the Fundamentals of Futures Trading course, the Proprietary Indicator Package, as well as lifetime access to our private Discord, where we live stream every single day starting at 9:30 a.m. Eastern. You can also purchase those products standalone on our website as well, in addition to one-on-one mentorship with me. I want to thank you guys one more time for taking the time to watch this content. I appreciate you, and I look forward to seeing you in the next video. Much love.